Hi traders, this is Cynthia of Day Trade Forex bringing you a special training video for trading the CFDs, contracts of difference, for the various CFDs available possibly by your broker. I'm using FX Choice, so all of my templates are set up with the CFDs that they offer. The names of them can be different from broker to broker, so the way you find them is in your market watch. If you scroll down, these are the different CFDs offered by FX Choice, and like I said, the names can differ from broker to broker. There's some of them that I trade that I like better than others, some that I don't trade at all. For instance, the two oils I don't trade, and the DXY is actually the dollar index. That follows the US dollar very well, but it's very expensive to trade, and your risk to reward ratio is terrible because of the cost of each trade. You have to have a really huge move in order to make any significant amount of money. If you use lot sizes that are too big for your size account, you put it at risk of a margin call if the trade goes against you. So even though I think the DXY is the easiest to trade because it follows the US dollar so well, it's also the most expensive and the most difficult to trade. Bitcoin, I don't trade any longer because the spreads are way too big and the big moves aren't happening this year. Last year, when Bitcoin was very strong and volatile and on the move up, it was really easy to trade, but this year it's just gone down and the spreads have increased, so it's not anything that I'm interested in trading. The moves are very small and the spreads are too big. The Japan index is interesting to trade if you trade during the Asian session. The first couple of hours of the Japan index opening are a pretty good mover. However, FX Choice doesn't allow you to trade it until possibly, I think it's about 2 hours after 5 p.m. Eastern. The Japan market opens, but FX Choice doesn't allow you to trade it. So those are the most volatile trading hours, but you don't get to do it. And maybe your broker is different. If you're in Japan and you're using a Japan broker, then of course this is what you'd want to trade. So the ones that I do trade are the US 500 index, the US 30 index. The US 30 is the Dow, the US 500 is the S&P 500, the US Tech is the NASDAQ, and I like trading the DAX index, which is the German 30, top 30 stocks in the German stock market, and I like trading the UK 100 index, the top 100 stocks in the UK. These are all some that I like to trade, but this video is to point out basically, yes, we have the opportunity to trade the CFDs, but there's a reason why they're so difficult to trade. And I want to point out the perils and the pitfalls. And some people might like to trade these because they're tied to the US dollar, and depending on what the US dollar is doing, it kind of gives you a guide. Everything in the world is pretty dependent on the US dollar, what it does, if it's strong or weak, goes up or goes down. This morning, the US dollar has been extremely strong. You can see it at an orange 6.7, but it's been up to red 7.7, 7.9. I think I even saw it briefly at red 8.0, which is really, really strong. We'll take a look at some of the CFDs to see how they reacted to the strong US dollar this morning. I did place some trades, but I got the signals a little bit late for a couple of them, so the one that's doing the worst right now for me is the US 30 index. And the way I start my trading day is I look at all the pairs that I'm interested in a daily chart, because my interest is seeing where the price is according to the red Fibonacci overbought zone or the blue Fibonacci oversold zone. It's very important to have a visual confirmation of where price is at, and you can see the long trend channel. We're looking at the US 30 index, which is the Dow index, Dow Jones index, and the US stock market opens at 9:30 a.m. Eastern Monday through Friday morning, and that's when a big explosion usually happens. However, I don't trade right at 9:30 because it can be short, explosive, and then reverse. So there's kind of a whipsaw happening, especially the first 15 minutes. Usually trend stabilizes an hour later. So the first strategy is to trade the US stock market open right at, say, 9:35 a.m. with a scalp set file. Now I give you all kinds of set files. I give you a set file for each CFD that I trade, and they're all scalping set files because there are two strategies, main strategies for trading the CFD, especially the US indexes at 9:30 a.m. when the US stock market opens. So if you wait 5 minutes, you can scalp in the direction. However, trend often stalls out right around 15 minutes later. So by 10 a.m. Eastern, the first 30-minute move is already over. And then if you wait another 30 minutes to 10:30 a.m. Eastern, the trend can do whatever it wants to do at that point, and it's longer and more stable. So the second strategy is waiting until 10:30 a.m. and using the preset files, which are for scalping. And if you catch a nice, strong, long trend, the scalp set file works just fine. If you choose to trade right at 9:35 a.m. Eastern for the first strategy, which is catching the beginning of the stock market, then that scalp set file works okay too. But it's more stressful, it's explosive, and it's short-lived, so you have to get it just right. Trading the CFDs are definitely riskier, maybe not as rewarding, and they're definitely more expensive to trade because the margin requirement for a CFD is huge. And I think especially for the DXY, the dollar index, which it trades very well according to the US dollar, so it's very easy to trade if you get your entries just right. You have to have fairly early entries so you can get the benefit of the trend, whether it's short-lived or long-lived. You need to get a good entry. If you get a bad entry, you're going to have problems in a pullback. I made a very bad entry this morning on the US 30. In the daily chart, you can see the candle is red, and you can't really trade the daily chart because this channel is too wide in the daily chart. But if I drill down and look at H4, we can see how bad my trade actually was. So the US Index 30, I had a sell trade, and you can see where the price had started to break down below the green channel support, and that's probably why I placed the trade. But I was in a shorter time frame. The RSI is turned down, and we have an orange hot dot that says to look for a sell entry. So in a 4-hour chart, it was maybe a little bit premature. If I had paid more attention to the lower time frames, I maybe could have gotten a better entry or not entered at all. Here in a 1-hour chart, you can see that I entered on a candle at the bottom of the wick when price hit support 1. All of the sell conditions were met. It's coming out of the red overbought. We had the red sell arrow, the channel turned red, the orange hot dot appeared. Everything was fine except for that the RSI was oversold. So it told me in a 1-hour chart that my entry was late. In a 1-hour chart, it would have been up here, and I would have already been out of the trade when this wick hit support 1. at some point along here, the trade manager would have kicked in, booked half of my lot size, and continued to trail. At this point, on the green candle, I would have been stopped out. So it was a very, very late entry in the H1 chart, and we can see it again on a M30 chart. You can see how the support one is the same, and I sold at the bottom of this long drop. So my sell entry was very, very late and prices reversed. And so my sell was when in a 30-minute chart the RSI was even more oversold. Normally you don't sell when the RSI is oversold like this. You sell when it crosses the 50% line. So this candle here would have been my perfect sell entry when the red arrow appeared and the price broke below the channel, and at 50% RSI would have been a perfect sell entry, and I would have already been out of the trade with my profit. Now I'm suffering through the pullback. Let's drop down to a 15-minute chart, and we can see again my very late entry. So I don't know what was happening, why I sold at the bottom like that. I got the alert, I was probably not paying attention, and I chased the price. So I saw a big push down and I just sold, and I sold at the wrong possible moment. And if I had really been paying attention, I never would have placed the sell entry so late. I would have placed it back here when I had a chance for a reasonable gain. So I really made a mistake. I chased the price, and I saw this big push down into the oversold area, and I sold at the top, because if I used my crosshairs, even if I had sold at the top of the Reddit support one, the top of the oversold blue channel, the bottom of the channel is 58 points. So that, and support 2 is 40 points away. So if price had continued down, I would have hit my target. So that's what it was. I was chasing the price in a 5-minute candle. Well, I only watch the 5-minute chart if I'm sure that I want to take a buy or sell trade. But even in a 15-minute chart, I never would have sold when the RSI is way oversold, turned green and coming up. That's ridiculous. And then of course it's gone into this consolidation channel, and I'm suffering through this drawdown, and I want it to go back down again, but it probably won't go back down again unless the RSI gets very overbought. Now we have a green arrow, so that's very dangerous for my position. I just want you to see the perils and the pitfalls. It's absolutely crucial that you get a good entry and don't make a mistake like I made right now. My stop out is not that far away. If this stays in a channel and then later comes down, that's okay, but that's a huge risk. And the reason it's such a big risk is that these CFDs are very expensive to trade. You can only use small lot sizes. You need a really big account. I'm playing with this in a $900 account, which is way too small for trading CFDs because I can't afford bigger lot sizes. And you can see what the risk is. The margin that I'm using for 3 positions is $246. The one that's the most expensive is the DXY. The dollar index is the most expensive to trade. So if I close this dollar index trade out, you'll see my margin drop down. You'll see that each of these cost me $75. So that's $150 for 2 indexes, but the dollar index by itself is $100. It's much more expensive to trade the dollar index. So you can only really trade that particular CFD if you have a really large account. $1,000 is just not enough. And look, at a 0.02, which is the smallest micro lot size you can trade that my trade manager allows you to trade with, the reason is because the trailing stop needs to book half of your lot size at the set file X number of points that it's gained, if it reaches that gain, then it wants to book half of your lot size. And if you start with 0.01, it can't book half of that. It can't take half of that. So you have to start each trade with a minimum of 0.02. And this DXY 0.02 cost me $100 almost. These are less expensive to trade, but they're a little more difficult to trade. I think the one I like trading the best is the DE30, which is the DAX. So I just want to point out to you that CFDs are risky mainly because the margin requirements are so huge, and compared to currencies, that makes them much riskier. Your gain when you win is smaller, but your loss when you lose is much larger. This is not for the faint-hearted. This is not for a newbie trader or even an intermediate trader. And it's not for a trader with a small account. $1,000 account is just too small. I just wanted to show you that the margin requirements are huge. And if I close out this DAX trade, if I close out the dollar trade, my margin went down $100. So that means that the DXY is just super expensive to trade. And even these are $75 for a 0.02, your smallest micro lot that the system will allow you to trade. And if you get into a bad trade, you've had a bad entry like I did on the US 30, well, maybe it'll go down. So now I'm in these two trades and they're using a lot of margin. I still have enough margin I can trade something that comes along, but if it's one of the CFDs, they cost a lot of money. This time of the day, markets are slow, at least in the United States. The traders are at lunch. London market is closed. So I'm stuck in these two trades hoping that I'll get something out of them. And basically, I just watch the US dollar. If the US dollar is very strong, then the US CFDs are going to be strong. If the US dollar is going up, the US CFDs are going to go up, especially the dollar index. And if you have a big enough account size and you can have a lot size that's big enough to make it worthwhile to trade the dollar index, it's very easy to trade. It's probably the easiest, but it's the most expensive, and you have to have a really big account. Now, anytime I want to choose one of these to trade, I have to go get the perfect optimized individual CFD preset file, which is inside of my trailing stop trailing manager EA. So you click the trailing manager EA up here top right corner to open it up. These are the settings for the button, the buy sell close button, and it's all of my conditions for selling or buying. All of the CFD preset files are for scalping, so the scalping time frame is 15 minutes. And each CFD preset file has a different spread. Notice it says points because when you're trading CFDs, we don't trade pips, we trade points. But basically it's the same thing as a pip. All of the values for the pip value always has an extra 0 on the end. So the max spread for this is 50 points, not 500. Everything has to have, for the pip value, point value, everything has to have an extra 0 on the end, which you have to remember that. And the risk percent of the account balance can be either 1% or 2%. It just depends on your account size. This $1,000 account size that I have needs to use 1% to give me a 0.02 starting lot size. If I change the risk percent to 2%, I would get a bigger lot size, but it would use double the amount of margin, so my account size has to be big enough to support that. You can't overtrade, use lot sizes too big when you're trading CFDs because the margin requirements are so much bigger and your account size has to be bigger to support the increased lot size. So it's better to just keep the risk percent at 1 or 2% max. If you have a really big account, $5,000, $10,000, then of course you can increase this risk percent to give you bigger lot sizes. However, your gain will be bigger, however your risk will be also bigger. The stop loss and take profit is always set at a risk to reward ratio of 1 to 2, so your reward is always going to be double what your risk is. Use Cynthia's trade management is set at true. You could change it to false, but for scalping these CFDs I would definitely use the trade manager. That's why we created it, to make it as hands-free. All you have to do is analyze your charts, determine the number of points possible for your reward, your target reward, and you just have to get your entry right. That's what you have to do. Analyze the charts, analyze your target reward, and get your entry right. No late entries. Late entries will devastate your account or keep you in a drawdown, which is worrisome. Percentage of trades to close at first take profit is 50%. You can always change this to 80% or 70%, but the default is 50%. So what this means is that we're looking at the DAX index. So the first take profit is 120 points. So just forget the extra zero on the end. So it has to move 120 points. At that point, the trailing stop function will kick in and will book half of your lot size. So if you're trading 0.02 micro lot, it will book 0.01 and you'll have an open trade of 0.01. It will trail by 50 points, and every time the price moves another 50 points, it will move your stop loss up by 1 point. So this is a fairly wide, loose trailing stop trade manager because the DAX can really move. Right now it's absolutely totally flat and not moving. But if you use your crosshairs to measure some of these moves, they can be huge. So you don't want to have trailing stops that are too tight, that stop you out prematurely. You have to give the trade manager some breathing space. And so that's the DAX set file. The US 30 set file, just click the smiley face. These are the settings. Now to load, make sure that before you ever place a trade, you go in here and find your set file for the CFD that you want to trade and load it, because otherwise the template comes with a preset file that's for a currency pair, not for the CFDs. So the currency preset file will not work with a CFD. Each CFD has its own unique individual set file. So this is the US 30 index, and it has a bigger spread, and the first take profit is 800 points, or 80 rather, set to take half of your lot, half of your trade when it hits 80 points. It will move your stop loss after that to break even 50 points, so you've locked in quite a bit of gain. And every time the price moves another 25 pips, it will move the stop loss 1 pip. So this is a nice scalp set file in case the US 30 index really moves. Today we're just flat completely, so there's no movement, but when it moves, this is a nice scalping set file which can gain you some nice money. Again, it's just up to you to get the good entry. Here's the USTechIndex in a daily chart, and click the smiley face, click load, and go find your USTechIndex scalp file, and it's got its own presets. Each time you want to trade an index, just make sure this is the US 500, click load, choose US 500 subfile. Gold even has its own subfile. Click load, find your gold scalp. It's a scalp set file. All of the CFDs are scalp set file. So any of these you want to trade, just go make sure that you've chosen the CFD set file and you're not trying to use a default currency set file. So those are the pitfalls, and you can see my little account history for today. I made $14.81. I can go buy a group of people some tacos, and so your reward is not that great when trading CFDs, and your risk is much greater, mainly because of the margin requirements. And again, because the CFDs are so expensive to trade, you need a large account size. I would say $5,000 could get you up to a 0.05 subfile, which could make you easily $100 a day or more or less, depending on if you manage to get yourself a good entry. That's your biggest criteria, is that you analyze your charts and get yourself the best entry. Don't sell at the bottom and buy at the top. Don't make a bad entry like I did with the US 30. So at some point, if this does not improve, I'm just going to close it out and take my loss, because I don't want to take any chances with the amount, $75, that is costing me to hold this trade. And I've got a green arrow, but it's still in the channel. Here's the red resistance, but if it gets anywhere near that, I'll probably get stopped out, because that's right where my stop loss is at. But if I see that it starts to come down, I'll definitely leave it open. But the stop loss is really what we call a catastrophic stop loss. It's for crazy price actions that occur suddenly and doesn't give you any time to think. But I never let my trades get to the stop loss. I always close them out. So now I'm watching the price climb to this Fibonacci number of 50%, and this is a retracement, so it's retracing 50%, which that's a pretty strong retracement. If I don't see it come back down really soon, I'm not going to let it get to the stop loss. I'm going to close it out manually. That means I have to sit here and babysit this bad trade that I made. You can see where I placed the sell trade at the bottom of the wick. RSI is green and way oversold and coming up. That was, I remember it was a 5-minute chart that I was chasing the price. So that is a huge risk. You have to be very careful not to chase the price. And it's okay to watch in a 5-minute time frame, but you already have to know ahead of time if you're going to be buying or selling, and you have to get a very good entry. You cannot chase the price like I did. I just wasn't paying attention. So if you're going to trade these CFDs, you have to really pay attention. They require more attention because they're more expensive to trade than currencies. So your account has more risk when you're trading the CFDs. I do have to say, the reason they are attractive to trade is because these US indexes trade very well during the US session. And typically currencies pretty much die out in the US section. The big moves are always in the London session. So for me, being a North American trader in this time zone, PST, CST, EST, because of the time zone, we can only comfortably trade the US session. If most of the currencies have already trended and died out by the time we're awake and ready to trade, what are we left with to trade? Pretty much only these CFDs. So if you have a big enough account and you're an experienced trader and you know how to make your risk reasonable for your account size, it would be probably to your benefit to learn how to trade these, but you have to be very cautious and not risk too much in your account, and you have to have a big enough account. So these are attractive for North American traders during the worst trading time zone around the planet. These are pretty much what we're reduced to trading, and they can move very well. Today's a very flat day, and so there's nothing exciting for me to show you. If I'd gotten up much earlier, I would have been happy to sell the US index right when it broke through the green support here, and now everything's going down, 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 but I was late. I got up very late. I sat down to trade very late. I wasn't awake enough to pay attention, and I made a mistake. You still have to get up and be ready before the US stock market opens, and that's at 9:30 a.m. Eastern. Most people can do that. Most traders can do that, and if you can do that and you're very careful, these CFDs give you trade opportunities that you normally would not have. Now, I have to admit that I have the hardest time trading gold. I know a lot of people love to trade gold, but I just have a very hard time. Here it is coming off of overbought territory with a red arrow, but it hasn't moved down below the green channel support line. That's okay in a daily chart. That would be a late entry if you waited for it to break through. The RSI is oversold below 50% level. So looking at a daily chart, the gold looks like it's ready to sell, but you need to jump down to a 4-hour chart to see what's happening. And this would have been an okay sell entry here, but now the RSI is way oversold and you have a green candle. So to me, these are all mixed signals, and it's just not tradable. And if you look at a 1-hour chart, it's actually, the price is actually coming up off the bottom of oversold. Price is actually sitting right on the pivot line, which means it could go up or could go down. The new candle that it just started is red and coming down. Because in a 4-hour chart, the gold looks like it's coming out of overbought and wants to go down with the red candle, I would probably be looking for sell entries if it broke through the green channel line and the RSI broke down through the 50% level. It is tied to the US dollar, but let's load the gold chart. First take profit is 50 pips, which is pretty aggressive. It could or could not move 50 pips, but if it reaches 50 pips, it's going to lock in half your trade and then move your stop loss to a gain of 25 pips, and then it'll trail by 10 pips. So this is an aggressive gold setting. However, sometimes it really can move 50 pips. So you can change this. If you've analyzed your chart and you've decided that a 50 pip move is too aggressive, just change this to 200 and change this to maybe 150, and you can leave your trailing stop at 10 or change it to 50, which is 5 pips trailing stop, and then just click OK. Now you've changed the settings to be even more of a scalp setting. If it's a mixed day, like today is kind of a mixed day and there's not a great movement, Mondays are typically like this. It's very unusual for the US dollar to be so strong on a Monday, but most of these pairs do not move very good. There's just no trend established on a Monday. Mondays are hard to trade. Typically, I find my best trading days Tuesday, Wednesday, and Thursday, and out of those 3 days, Wednesday is most definitely by far the best trading day. So Monday I don't take very seriously. If you're going to trade Monday, be more cautious, mainly because the trends for everything have not really been established after the weekend. And Friday is usually a big news day, so if you're a skilled trader, you can take advantage of news. If you're an unskilled trader, it's better to not trade on Friday. the trends die out pretty early on a Friday, so you definitely don't want to be trading anything on a Friday afternoon. So now I just got for the DAX, I got a signal to buy, so let's go look at the DAX. And the DAX, we want to go up. I don't know why I got a signal for the DAX, but we're in a 1-hour chart. Let's look and see what's happening in a 30-minute chart. Maybe it's the RSI that turned green a little bit, because the candle is kind of a doji. So it's in a pullback, but it's coming off the bottom of oversold. Let's use my crosshairs to see what possible target I might have. The resistance number 3 looks like it's 75 pips away. Resistance 2 is 30, and target for overbought area is 240. So the DAX, this is a nice tradable space between here coming up out of the oversold. So we just need it to move. I think that's enough for trading the CFDs. You can see what the perils are and what the benefits are. The main benefit is to have some tradable instruments for the US session. However, if you wait too long, I would say the first 2 hours of the US stock market are when these things really move the best. After that, they just pretty much slow down and go into consolidation or pullback. So if you are interested in the CFDs, now you know the perils and the benefits, and now you know that when the stock market opens, when the US stock market opens, you have about 2 hours of good trading opportunity, and then most of the traders go to lunch, so everything slows down. Right now we're in the lunch period, that's why everything is so slow. In the next hour, things should wake up a little bit and price action can resume or turn around. Who knows? There's no way to know. So just be in and out. US stock market opens at 9:30 a.m. Be in and out by say 11:30, 12 noon Eastern at the very latest. Just be out. Those are cushy trading hours for North American traders. But you have to have a big enough account, be a very good trader, and get really great entries and not get stuck in a bad trade because of a bad entry, especially going into lunchtime, because in the afternoon things can change. But I found right around 2 p.m. Eastern, there's a lot of sell-off, traders taking their profits starting around 2. So from 2 to 3 there can be a nice sell-off. So if you can't trade the first 2 morning hours of the US stock market, trade the last 2 hours of the US stock market and take advantage of the profit taking, which is the sell-off. You'll see all of these start to come down starting around 2 p.m. It's based basically on how traders trade the stock market. That's what the day traders do, and they'll sell and take their profits at the end of the day. So starting around 2 p.m. you can start looking for trade opportunities if you miss the morning. So I thank you so much for watching. I hope I haven't thoroughly confused you, but I just think this is something that traders need to be aware of and learn how to trade just for alternate instruments to trade, because sometimes the currencies are just not moving, or you have a lot of red or blue, which means the big moves are already over. Lots of red and blue today, and the big moves are already over. So that leaves you with the CFDs, but right now, of course, it's lunchtime. Now the US 30 index M15 look for a sell. That's my hot dot. So the hot dot appeared at some point. It knows that the RSI is turning down, and if price breaks down below this support, the US 30 index is going to start going in my direction. So Lunchtime is almost over. It's possible that the traders are back from lunch and things are starting to happen. I hope. Okay, so thanks again for watching. I'm going to stop my rambling and thank you so much for listening to me, and I hope you learned something, and at least it's an education, correct? There's my hot dot. It appeared again. Price is moving down. So hallelujah. Maybe I'll get something out of this trade. And the DAX after that can do whatever it wants in the afternoon. Okay, well, now I feel a little better. Okay, see you in the next video. Thanks again.